Today, we have big news for traders in the United States. FTMO is officially back for US residents. If you're a serious trader, you know this is a major development. In this video, we're going to break down exactly why FTMO left the US in the first place, what's changed with their relaunch as of August 26, 2025, and what it means going forward. I'll also share how we at XO Capital have prepared for this moment. We've been operating within FTMO's program exclusively, managing over 5 million in FTMO accounts, so we have some perspective on this. Stick around for some insight into our strategy. No hype, just a calm, deep dive into the facts and what they mean for serious traders like you. Before we dive in, here's what to expect in this video. Why FTMO left the US. Basically, we're going to cover this with the document I have here, so you'll be able to follow what I'm talking about. So that would be why FTMO led the US in the early 2024, our first point. Then we cover FTMO's return via OANDA, a strategic partnership, the new US model, simulated trading environment and rewards. And finally, we'll speak about a little about XO Capital perspective, our approach of focusing solely on FTMO, managing 5 million FTMO portfolio at the moment, spreads across around 15 different accounts, because we are capped to 400K per FTMO account, as you might already know. So why FTMO left the US in early 2024? So that would be our first point. First, a bit of context. Why did FTMO left like that in early 2024? It wasn't because of lack of interest for the US market. In fact, the US has always been a huge part of prop trading. Before all the trouble, American traders made up nearly 30% of the traffic to top prop firms. So what happened? It came down to regulatory issues and a crackdown by both regulators and platform providers. Here's the story. So CFTC lawsuit, My Forex Funds case, might ring a bell. In mid-2023, the US Commodity Futures Trading Commission, CFTC, went after one of the biggest prop firms, My Forex Funds, alleging it was basically a fraud. The CFTC's lawsuit forced MFFF to shut down, sending shockwaves through the industry. This made all prop firms, including FTMO, very nervous. Regulators were questioning whether these firms were unregistered brokers or engaging in illegal offerings. So after the MFFF incident, prop firms scrambled to adjust their language to avoid being seen as offering real trading or investments. You started seeing careful terms like demo trading, simulated platform, and virtual funds on several websites. FTMO itself quietly tweaked its language to emphasize that it offers simulation and education, not a traditional brokerage service. And we'll speak more about this simulated structure in a moment. It's key to understand the return in the US. Just when firms were adapting to those legal pressure, another bomb dropped. Early 2024, you might remind MetaQuotes, the company behind the popular MetaTrader 4 and 5 platforms, blocked prop firms from serving US clients. That was in early 2024. This was huge, MetaTrader being the lifeblood platform for many Forex traders and prop firms. Suddenly, overnight, firms like FTMO and the 5%ers could no longer offer MT4, MT5 to their US users. Operations ground to a halt for US customers at this time. FTMO and several competitors had little choice but to suspend services for US traders around that time. Essentially, US traders were cut off from these programs unless they use non-MT platforms. So exiting the US was the decision. Given the regulatory uncertainty and the MetaQuotes ban, FTMO decided to stop accepting new US clients and block US access. They played it safe rather than risk any legal trouble. It wasn't the only one. Many top prop firms did the same. In fact, by early 2024, both FTMO and the 5%ers stopped US operations. And a bunch of others you might remind funded next, my funded FX, for example, that followed. The entire CFD Forex prop trading industry pretty much pulled back from the US to avoid running full of regulators or platform bans. So now you might be wondering, why did US traders do in the meantime? Well, a lot of them shifted to futures prop firms like Top Step, Apex, or My Funded Futures, the one I've covered in previous videos. And those companies deals with futures contract under US futures regulation. So it surged in popularity while Forex CFD props were in retreat. Essentially, futures-based programs filled the gap in 2024. But the interest in CFD Forex prop trading never went away. The US market was too big to ignore for long. No global player can afford to ignore it. So to summarize, FTMO left the US due to regulatory crackdowns and a MetaTrader platform ban. They couldn't offer their service without significant changes. This set the stage for their comeback, which brings us to 2025. So that's the next point in the document we've seen. So we'll be here, FTMO return via Oenda. I'll be sharing quickly the new FTMO website related to this partnership. So FTMO being back in the US as 26 August 2025. How exactly? Well, through a strategic partnership with Oenda, a well-established US regulated broker, and it will unpack what this partnership means. So I'm going to put up FTMO's official announcement from August 26, 2025. Let's just have a check to this. It should, I thought I put it up, but it's not here. So if you type on Google FTMO Oenda, I think you should find it directly on the FTMO website here. FTMO and Oenda enter into strategic partnership. It's the title of the article. As you can see here, FTMO enter into strategic partnership, making modern prop trading accessible to the US, dated of 26 August 2025 for this article. It roughly, basically, it mentioned FTMO and Oenda have agreed to collaborate on a strategic partnership, giving users in the United States access to an educational platform and simulated trading tools. Residents of the US will be able to benefit from FTMO's comprehensive educational system. Successful participants will be offered the opportunity to earn rewards by engaging in simulated trading using simulated capital through an FTMO rewards account. So there's a lot in this statement. The key points are educational platform, simulated trading tools, and rewards with simulated capital. In plain English, FTMO is re-entering the US market, but framing itself clearly as an education and training service with only demo trading, not as a broker or investment firm. This clarity in wording is very deliberate. We'll explore the rewards account just in a second. Now we might ask ourselves, why Oenda? Oenda Corp is a US regulated broker. They're registered retail foreign exchange dealer with the CFTC and a member of the NFA. By partnering with Oenda, FTMO gains a compliant infrastructure to offer trading to US users. In fact, FTMO's new US service runs on MetaTrader 5, hosted by Oenda. This is a big deal. They basically found a legal loophole or a path piggyback on a regulated broker's tech and license. As Finance Magnets notes, so let me put up the article here. This was the article from FTMO. We also have an article from Finance Magnets that basically covers the subject. In this article, the advantage is possible thanks to OANDA's regulatory status. It gives FTMO a level of credibility and access in the US that others don't have. That's what they mostly mention in this article. It's worth noting that FTMO's parent company is actually in the process of acquiring OANDA globally, a deal announced in early 2023. So you can check on CVC website, which is the owner of OANDA. Speaking about that, CVC funds agreed sales of OANDA to FTMO. So that was back in February. Basically, on their website, they mention OANDA founded in 1996, speaking about this merger. So we are still in this point at the moment. And as you know, they changed the website. So now when you go on FTMO, so as you can see here, ftmo.oanda.com, that's the website for the US. So that would be the website for the US here. The US specific FTMO operation is essentially a joint domain. Like you've seen ftmo.oanda.com and a joint effort. FTMO provides the prop trading model and evaluation. OANDA provides the brokerage tech and regulatory cover. So as of late of August 2025, US traders can once again sign up for FTMO's challenge and, if successful, trade on a funded account, but under this new structure. FTMO's co-founders have said their goal is to offer the product on a truly global scale, and the US was the missing piece. Well, now that piece is in place. This is exciting because it reopens a huge opportunity for US traders who want to trade with significant capital and get paid for their performance. But it's crucial to understand the new model FTMO is using in the US, which brings us to the concept of the FTMO rewards account, which is our next point in the spreadsheet, in the documents. So that would be here, the new US model. So let's talk about what's changed in the FTMO's US program. In many ways, the trading experience is the same as before. You still have the two-step challenge and verification. As you can see, when we check the website, OANDA, it's actually quite the same, a bit different. When we go down, it's not exactly the same website, but it's almost similar. The challenges are here quite similar. They mention average rewards, as you can see here, which would represent a percentage of the 200K account. So here, speaking about a 5% payout, that would be, and it's almost the same thing for the user. It's actually the same thing for the user in a sense. The terminology and legal structure change, but the trading itself doesn't. FTMO is bending over backwards to emphasize that everything is simulated and that payouts are rewards, not a share of trading profits in a live account. Why? Because this addresses the regulatory concerns. If it's all simulation, then FTMO isn't operating as a registered broker or investment firm. It's an educational service or a performance-based reward program. And by calling payouts rewards, they avoid terms that might imply profit from investing. So let's break down the key features of the US model. Simulated accounts only, which is the first point. In the US, FTMO does not offer any real trading accounts or brokerage services. Everything happens in a demo trading environment with fictitious funds. This was actually always the case with FTMO globally. Even the funded accounts elsewhere are demo accounts as well. But now it's kind of made 100% clear on the website, if I can say. So you're trading on a simulated account, period. No real capital is at risk. At any point, your trades do not go to a live market. Just like the global program, US traders must pass the FTMO challenge and verification phases to become what they call an FTMO verified prop trader. So you still have to hit the profit target, 10% phase 1, 5% phase 2. Those rules and objectives remain the same in the US offering. The only slight tweak might be the leverage, but they didn't change it. It's the same. You can have access to standard or swing accounts with the standard accounts with a 1 to 100 leverage and the swing account 1 to 33, giving you access to no restrictions on news trading or holding over weekends for the swing account. When you pass the evaluation, you don't technically become a funded trader, like we've mentioned. You become a verified prop trader and get the FTMO rewards account with simulated capital up to 400K allocation per account. That's the maximum you can get on FTMO. So, for example, you could have 400K accounts or two 200K accounts. The critical part is this rewards account is governed by a signal provider agreement between you and an Oanda subsidiary. So that's how they deal with it legally, if I can say. Now the fun part is getting paid. FTMO explicitly says if you succeed and trade well on the rewards account, you become eligible to receive real monetary rewards based on your performance within our simulated environment. I'm quoting them. So in other words, yes, you get paid real cash if you make profits on the fake account. This is effectively the same concept as the old profit split, just under a different name. FTMO's payouts to you is called a reward. And they clarify, even though FTMO traders trade with fictitious capital only, they are entitled to obtain a reward in the form of real money if they can generate profits on an FTMO account. So if you earn $10,000 on the simulated account, FTMO will pay you a reward of that amount minus their cut. By default, FTMO keeps 20% as their fee and gives you 80%, just like the classic profit split we find in most prop firms. In the US, rewards can be requested at any time, and it will be pretty fast within 24 hours, I guess, like it is globally. It is important to highlight that FTMO's US setup is not a regulated investment service. That's what they want to emphasize, and that you don't have a direct relationship with Oanda. What you should know is, from a trader's perspective, as long as you trust FTMO to honor payout, the lack of formal regulation isn't a deal breaker. In fact, FTMO's reputation is what gives traders confidence. They reportedly paid out over $75 million payout in 2023 and crossed the 100 millions in 2024. We don't have the official numbers, but we are almost sure they crossed the 100 million payouts in 2024. You'll notice FTMO goes out of its way to use the right language. Terms like demo, simulated, reward, and simulated funds are everywhere. They even call the trading instruments simulated assets in their materials. So this is all to drive home that no one is depositing to a trading account or trading real money. So in summary, the new US model is FTMO's classic prop trading concept wrapped in regulatory-friendly packaging. You still have to be a good trader to make money. Nothing is given, but you're doing so in a completely simulated environment. And when you succeed, FTMO pays you a reward as a result of that success. No investors, no live accounts, no direct profit sharing from a pool, just a performance reward system. Now, let's shift gears and talk about XO Capital's perspective on all of this. We've been operating within FTMO's framework for a while, so we had a unique vantage point through this transition. You might know we've incorporated in November 2021. We are about to celebrate our 4th birthday, which gives us a lot of experience about FTMO. Let me share back my screen. So we were on the FTMO website. Let's go back here. I wanted just to mention FTMO's business run on challenge fees. They get paid even if trader fails. So their incentives aren't directly tied to traders' failure. That's something I'll mention a bit more in my next video, speaking about prop rules, prop risk, what are prop firms basically. So if you want more information about the business model of the prop firms themselves, do not hesitate to subscribe to not miss that video. Now we'll cover what I've been mentioning, basically our readiness for that and I end with some closing thoughts. So yeah, if you followed Exo Capital, you know that we specialize in one thing, managing FTMO accounts with our FTMO management service. That's something we offer to our clients. It's a done for you service. We're not spread across multiple platforms or trying to chase every funding company out there. Our sole focus is FTMO. We did this because FTMO has proven to be the most reliable and trader-friendly platform over the years. Even when they paused US operations, we stuck with them by managing some accounts for our US clients, using bypass in order for our US clients to access FTMO. Now we are glad we are very welcome. It's a very welcome news that FTMO is reopening to the US. We've essentially been fully prepared for this moment. Let me highlight a few points about how we operate and why that matters now. We operate only within FTMO's ecosystem, not with multiple platforms like I've mentioned. That means all our strategies, risk management practices, and knowledge base are tailored specifically to FTMO's rules and conditions. We know their trading objectives, drawdown limits, hidden rules, and what I mean by hidden rules is their hidden directives that are not officially written down on the website. This singular focus has allowed us to excel at FTMO's challenges and funded account management without distraction. Now that US traders can join again, we're not scrambling to adjust to a new firm's rules. We're already deeply experienced with FTMO. So to give context, FTMO's rules include the standard 5% daily loss, 10% max loss, no trading during news if you're on standard accounts. But what you should know is we've built a strategy that stays comfortably within those parameters month after month. As of now, we manage over 5 million in FTMO accounts for our clients. This is spread across 15 accounts, each capped around 400K maximum. Being responsible for 5 million portfolio on FTMO is not something we say lightly. It underscores the meaningful footprint we have in this industry. It also reflects a lot of trust from our clients and a lot of confidence on our part in FTMO's system. We wouldn't be managing that volume if we weren't seeing consistent success and reliable payouts from FTMO. In fact, FTMO themselves have paid attention to big players in their program. Globally, they pay out hundreds of millions in rewards, and our chunk of managed capital is part of that story. So we've been refining our strategy for a long time. It's been built around consistency and risk management, exactly what FTMO is looking for in a sense. We use hedging strategy. As some of you may know from our other videos, that aims to profit from market using volatility while protecting against large drawdowns. The result has been a track record of regular monthly profits on our FTMO accounts. So when someone asks, are you ready for FTMO US? Our answer is yes. We've been doing it all along in the FTMO global framework. We didn't need to change our approach for the US relaunch. The same strategy that was working in 2023, 2024, 2025 continues to work now under the rewards model. So we were basically fully prepared for FTMO's return to the US because we never stopped trading FTMO accounts. One thing I want to stress out, and this remains true in the new FTMO setup, is our incentive aligns with our clients. We operate on a simple principle. So we only earn when you earn. If there's no profit, no reward payout. Neither our clients nor Exo Capital makes money. I guess you might have seen that was the point I stressed out here. So if you're not making money, we're not making money. Our fee is a percentage of the payouts we generate. So it's in our interest to keep those payouts coming and growing while keeping risk in check. We don't want to blow it out completely because we wouldn't be profitable if so. I mentioned this because it's central to our philosophy and it's exactly how FTMO's model is structured. Our FTMO model is a win-win deal between you and Exo Capital. Now, let's talk about the consistency, what we are most proud of. It's not about one lucky month. It's month after month, steady gains. And we make profits on a yearly basis. That's not something that will get you rich in one quarter. One more note on those rewards. The numbers we and our clients receive are after FTMO's profit split, of course. You know, they take 20%. And we use part of that payout to finance the next hedging collateral. If it's not very fully understandable for you, stick until the end of the video. You'll see a tutorial to fully understand this. Now, a quick business update from our side. Our FTMO account management services are currently closed to new investors. We've capped our intake for now to focus on our existing clients and ensure quality performance. So if you're thinking this sounds great, how can I get on board? The honest answer is not at this moment. So we're not taking new accounts or capital right now. However, this may change in the future as we expand capacity and launch new strategies. So if you're interested in potentially working with us down the line, I encourage you to subscribe to our channel and maybe hit the bell so you don't miss any videos. That way, when we reopen our services to new investors, you'll be the first to know with the video we'll publish on YouTube. You can also check our website. You'll see the term change when we reopen doors. Again, this is a soft mention. I'm not making any sales speech here, just letting our viewers know the state of things. We believe it's in not stretching ourselves too thin, which is why we limited our managed accounts to 15 at the moment. We are working on developing more accounts, but so 12 to 15 accounts. We're actually at 15 at the moment, as you can see here. And that's what I've mentioned. And basically, this ensures we keep delivering the results we just showed you. We need unique strategies for each account because we are not allowed to do copy trading. So this is why we cannot expand to a 50 million portfolio like this. We need to do this properly, step by step. So let's move to the final notes. The return of FTMO in the US is great news for serious traders, really. It means you once again have access to one of the best prop firm, if not the best prop firm on the planet, now in a fully compliant package. So if you're a skilled trader but don't have a huge amount of your own capital, FTMO's model lets you scale up with virtually funded accounts and earn real money rewards for your performance, all while limiting your downside to basically zero, aside from the challenge fee. In a world where trading typically means risking your own hard-earned cash, the prop firm route, especially with FTMO's refined approach, is a breath of fresh air. For US traders specifically, the past year might have pushed you into futures prop firms or kept you on the sidelines. Now you have the choice to trade Forex, indices, commodities, crypto CFDs, under the FTMO program again. So the playing field is a bit different. Remember, it's framed as simulated trading with rewards, but the practical reality is you can pursue similar strategies as before. Just pay close attention to the rules and terminology updates. Make sure you understand the contract you sign and the tax implications. So you need to file that W-9 and report reward income. Stay disciplined. FTMO's rules needs to be carefully respected, especially the max daily loss, and that should be fine. For our existing followers and clients, you've seen that nothing really changes in terms of how we trade. For this kind of accounts, we'll continue doing what works within FTMO's system. We're excited because the US relaunch might eventually allow us to bring more US-based investors into our fold once we reopen intake, once we reopen doors. But even if you're just trading on your own, we think FTMO US is a fantastic opportunity. It's the same chance to leverage a large amount of demo capital and make real profits if you have the skill, just with more legal safety for everyone involved. To end this off, I want to redirect you to the video I've mentioned, which is our top popular video where we explain the hedging strategy we use within the FTMO environments. It's essentially a tutorial on how we approach trading to generate consistent returns while respecting FTMO rules. No hard sell here. As I said, our service is currently closed to new folks, so consider that video and that's an educational resource. We are big believers that an informed trader is a successful trader. Until next time, trade smart, stay disciplined, and welcome back to FTMO, US traders.